still got to follow the same plan. And that's what trading is about. You're not every month is going to be a winning month, and that's what you need to understand. You just need to keep following the plan, keep executing, and eventually overall you will be profitable. Today I'm going to be going over a trade that I took yesterday. It lasted until today. It took a lot of patience, and I feel like there's a lot you can learn from this singular trade, my strategy, and my mindset throughout this whole trade. So y'all stick around in the video. As you can see, I'm at home. I've been home all day, even in my at-home clothes, and you know I'm not changing for this video. I wanted it to be a raw video and everything. So right now I'm gonna actually be going over this. So I already have this drawn out right here, and basically I wanted to show y'all how I view structure, because a big part of my strategy is how price is moving overall. And GA is currently bullish overall, and basically how I view bullish structure is at least 2 breaks or more. So that could be highlighted with this right here. That's the first break. This is the second break. You can have a third break if you want. But as soon as we get this break of structure of a low, I don't consider on selling price. And the reason for this is most of the times you would notice a break of the low will actually be a good sign that price actually wants to re-break the higher to continue this overall trend like that, and so on and so on. And you will see price repeat itself like that. Now, that being said, I took a 15-minute entry, and on those who know how I trade, you can use my strategy on any time frame, and I basically have it on YouTube how to basically trade as a 15-minute as your main entry time frame, because you're gonna need multiple time frames before you take an entry on that 15-minute. If you needed a 1-minute entry, you're gonna look at different time frames before you jumping on to that 1 minute to make sure you're not getting into unnecessary losses. And what do I mean by that? So if I'm a 15-minute trader and I'm looking for 15-minute entries like I did here, I'm going to be looking at a 1 hour time frame to basically validate the movement of where price is currently heading. And then I'm going to be also using one more time frame, which is 4 hour. Actually, you could say 2 more time frames, the 4 hour or the weekly, but the 4 hour is just another confirmation that price is bullish. Um, and then you could use the weekly as well if you want to. So if we look at the weekly time frame, what do we notice? These lines right here on my chart, if you go to indicators and type in MentsFX structure indicators, it basically shows you the highs and lows of the market. So that being said, if we look at a weekly chart, we notice that price is bullish. Why is it bullish? Well, the last high that was highlighted with the indicator was right here. It broke up, and we had 2 breaks. And remember how in the beginning of the video I said we need at least 2 breaks or more on the higher time frame to consider a market bullish. So now that we had that second break, we can assume price is gonna remain bullish from those points. And then as you can see, price breaks up again. So we're here in this point of time right here. So that's how I know it's bullish. But we're here at this point in time, and I notice it's a bullish market, and overall I can expect the target of the high. What you would notice with my strategy is price is fractal. The same thing that we're analyzing on the weekly, you're gonna notice those on the lower time frames. So as I talked about before, we're gonna use a 4 hour time frame, and as you can see, we see the same type of movement happening on the 4 hour, where we had this high right here that was broken right here. We had a high right here that was broken because it was indicated by this low right here. There was another high indicated by this low that was broken, and so on. So that's another confirmation that price is bullish. Now that we know that GA is actually bullish, we can hop down on a 1 hour time frame to validate that movement again. So we have multiple breaks of structure, multiple breaks of structure. And that is a good confirmation that price is bullish. And now I have something called a demand validation area, which I do cover in my upcoming mentorship. There's more details in the description, but basically I have something called demand validation, which I found on the 1 hour time frame. You want to find that on your validation time frame, which is the 1 hour. In this case, since we're taking a 15-minute entry, and as you can see, we had the same movement happening on the 15 minute. So we want all the time frames to align. If the story on the 15 minute is showing us bearish, but on the 1 hour and overall we're going bullish, then I'm just gonna simply stay out of that market and look for a better market that I can potentially get involved in. Now we have multiple breaks of structure from these points right here. So we have a break, 2, 3, 4. And this point right here, we break down. This is just like in my example, I talked about the break of a low does not necessarily mean price wants to go on a downtrend. Now, there may be people that are looking at this to looking to sell right here as a resistance to go short, or they might take this supply zone up in here to go short. But instead, I assume automatically that the target is going to be high. And if you actually look in the charts and backtest this, throw the indicator on, you will see this type of thing happening over and over. Now, if you know my entry setup, if you watch my previous videos, simply what I would be waiting for is I don't wait for pullbacks into zones at all. I trade with momentum. And how do I do that? Say we have a bullish market, okay? I'll wait for some type of pullback. It doesn't have to be to a specific zone, but I do tell you on what the pullback has to look like to set up a potential entry in my upcoming mentorship. So we get some type of pullback. We have an impulsive move. The moment we have like a correction or like pause in price like this, I'll set a buy stop right above the high. So say this is the high right here. I'll set a buy stop uh, right there. And then I'll basically put my stop loss where the correction has stopped before expecting a movement to impulse upwards from that point to keep going. And basically I will break even at a 1 to 1.5 RR, and then my full take profit is a 1 to 3 RR. So you're gonna actually see that on the chart right now of what I'm talking about. Now, I talked about this break right here. Now, where's the impulsive move? We had this impulsive move right here. We had the correction that I'm talking about. As soon as that correction happened, I set a buy stop. I put my stop loss where the correction happened, and then price pushed up, and I was in the trade. Now, the reason why I say this took a lot of patience was because most people in this area right here, so this whole area would either close their trades early, if that's of course if that's not their plan to, like, if their plan is to hold the trade to TP and hold it to stop loss and stuff like that, most people would break their plan during this time, because in this time price was just moving sideways. It was not making a clear direction during this whole time. So I was it was constantly going in profit, then slightly going into drawdown for around like 13 hours. 13 hours. So I would check my phone here and there, and I'll be like, okay. And I would just put my phone, keep doing what I was doing, just chill, let price play out until I get my rules to break even met. So the first thing I do when I enter a trade is I assume price is gonna lose. And that's what you do on when you assume price is gonna lose. You 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 stop creating expectations of your trades winning, because when you create expectations of your trades winning, um you get disappointed when the opposite happens, if you get what I'm saying. So me expecting a loss because I took the risk on the trade, so obviously there's still risk, so there's still a potential that I can lose this trade. So until price started pushing out of this area and got to my break even area, that's when instead of me thinking okay it's going to be a loss, I'm assuming that price is going to break even. So I'm going to have a break even trade. Now, there's only two things can happen at this point. Either I get a break even trade or it hits my TP. Now, I will be honest with y'all. Around this area, I did close early. Now, the reason why I closed early around this point right here is because earlier this morning, if you can look, it's the 24th today, same day I closed the trade. There was news coming in at 9:45, I believe, and I closed it at around 9:30ish because I didn't want price, like the news, to affect price and push all the way down when it's so close to my TP. And that's a rule. If it was all the way down here, I would just let it either push up to TP or hit me out at break even. But because it was so close, I was like, it's better to just close out the trade right here, and it wasn't too far. So I closed it, ended up pushing up and stuff like that. It still would have hit the TP, but it was okay. It was fine with me, and that's how the trade went. Now, like me, if you know me and you follow my channel, you know how transparent I am. Now, even though I took this $2,400 win, I've been on in drawdown since. So this is my FX book. It's public. It's in the description. You know, I've been in drawdown since June. So even though I took that nice winner today, I'm still in drawdown. So I still got to recover my losses for June and recover the rest of the loss. If I can just get one winning trade before the end of the month, I'll be in profit for this month, and I just still got to follow the same plan. And that's what trading is about. Not every month is going to be a winning month, and that's what you need to understand. You just need to keep following the plan, keep executing, and eventually, overall, you will be profitable. And if you look at my equity curve, even though I'm not risking 1% per trade, I'm risking 0.65. But even though it's 8.63 average in this right here, which is a little bit bad for me. It was just at 2% on per month for a good while. But the way how I think about it is I still have the rest of the year to bump my average back up to that 2% minimum for me. And that's going to be pretty easy. You know, as you can see right here, I just went on a losing streak, which happens to every strategy. And as you can see this is an uptrend, actual uptrend. So, you know, we take some wins, we take our losses, we take some wins, take our losses, and so on, and we just keep following the plan, you know. Then I have some withdrawals along the way,